Hello everyone, this is my first video, and after a lot of requests, trust me, I got too many DMs for a guidance for your setup, your model. Tell me, please help me, guide me. So, to clarify, I cannot DM everyone. I cannot reply to every comment, but I came up with the solution, and this is to share on YouTube channel. So this is my first video, so do not expect a lot on this video, but I will try to make sure your foundation on ICT concepts gonna be strong through the way I have prepared to show and develop a foundation within some frameworks that Michael J. Huddleston has been teaching and sharing. But I know for most of us it is very complicated. For most of them, it's something that you might feel lazy to go through. So I will try to be as simple as I can, but trust me, this thing that ICT has been teaching or whatever he has been sharing is not an easy thing. It is definitely a complicated one, and that's why he has been also warning us that this is not for everyone. You have to have give your enough effort, time, and if you are lazy, you cannot master this skill. What ICT has been teaching. So again, to make sure the viewers, you guys can give me a feedback, comments, and my Twitter or on my Discord free chat link. I'll try to put on the link on this video in the description, but I'm not sure I will do or not. But if there is any link, you can go through that. But sure, from the second video, I'll be more prepared, more managed. So allow me some mistakes, some errors, because this is my first video. And one more thing, that if you are looking for simple thing, simple model, simple um, idea that can make money, you're in the wrong place. I cannot do that. Even for me, I had to give my years of time to understand, to master this concepts of ICT. But still, I'm student of ICT. My mentor is Michael J. Huddleston. Every credit is and will be going to Michael J. Huddleston. So whatever I'll be sharing with you is not my personal invention, discovery, or teaching, but my personal understanding on that through the mentor is will be provided. So, and by the way, this video or the future videos not gonna be any futuristic animations, cool um, images. It's gonna be boring, but I will try to be as simple as possible. Still, do not expect simplicity on any concepts, because they are not, and I want be able to give you half knowledge. That does not allow me to give you simple looking thing, but with a half knowledge, with very unacceptable way of teaching or understanding or applying. Okay, so let's go to the point. And today I planned to start with market structure shift. Yep, market structure shift. Very simple, very popular, very known. But I think even with the market structure shift, people are still not able to do things in a correct way that ICT has been trying to teach, share. So this is going to be my take on market structure shift. This is how I have understood market structure shift and how to align market structure shift with the bias, with the direction. All right. So let's start. I'm going to go with a rough drawing how simple market structure shift might look like. Okay. Okay. So you will be confused in a first few videos for sure, but try to pause, take a time, and try to understand what I'm trying to explain. Try to go into a deep and dive into this so that you can get all from what I'm teaching, what I'm sharing. Okay, and these are not the top notch um, information or say concepts, but it is very close to what I do with my students. So anyways, you guys do not need to buy any course or not recommended to join any discords of mine, because even I learned from Michael J. Huddleston YouTube channel, Inner Circle Traders YouTube channel. You guys can go there. It's all free. Everything is there. That's all you need. But these are just a simple way of um, explaining things, which won't look like simple though. All right. Anyways, let's start. So this is a bullish structure. Bullish, bearish, bearish. Correct. Now this 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 and this all telling the same thing, which is market structure shift, market structure shift, market structure shift, market structure shift. But this is bullish, bullish, bearish, bearish. Correct. So let's dive into this one first. Okay. So when price breaks a previous high, that defines as a market structure shift by definition. Correct. But there are things that you might be noticing on this area. So I'm going to explain on this area later on, but right now you can just focus on this, that if the previous high gets broken, now it's a market structure shift, correct? But again, I'm also gonna be explaining about this portion, and then this and this two rectangle box sections gonna be clarifying you to understand the market structure shift. Okay, so here, what is market structure shift? When price goes above this blue line. Blue line is what? It's a previous high. So whenever we say a market structure shift, there's two cases. Either it's getting through the wick or it's getting through the body. The number one and the only correct way is body getting outside of the previous high, not just the wick. Wick does the damage, body tells the story. Again, a classic saying of ICT. So when price goes above this, the market structure shift is triggered now. So what you anticipating is price is gravitating towards upside, to the buy side. Okay, so now this is bearish, this is bullish, this is also bullish. We're gonna talk about this and then this again in a while. Here is the bearish scenario. All right, so this section we're gonna talk on this later on again, and then this is again will be the case to study. But what happened here? When price comes lower than the previous low, and now it's wicking, not a market share shift. But if it is body that's getting outside the previous low, then it's what? Bearish market structure shift, correct? So body tells you the story, not just the wick. Wick does the damage, okay? So again, we're going to talk on this section. All right. Same bearish structure move. So now, on this bullish structure, what is this? A low and the higher low, correct? So when you see a low and a higher low, and that market structure shift is going through the mitigation block, which is right here. But this, when this structure could not break this low, now it is going through mitigation block. What does that mean? Here is the mitigation block. Okay, I'm gonna show it this show this on your chart, on my chart, my bad, on my chart. But right now what you need to focus is, if price is breaking the previous high, that is market share shift. But how is it delivering? Is it like this or this? Is it taking the previous low or not? If it is not, that means it is breaking through the mitigation block. Okay, so I'm gonna write this mitigation block right over here. Mitigation block. Okay, so what's happening here is market structure shift being seen, but through the mitigation block. Okay, okay, so there will be a mitigation block, market shift, but through the mitigation block. That's the key. Why? Because it could not go lower than the previous low. All right, if this happens, that's this case, this one, right? So what happened here? Price broke the previous low, and then you get to see a market structure shift, correct? So what's happening here? Market structure has been shifted, but how? Through the breaker. Okay, through the breaker. Why breaker? Because the candles over here that helped price to go lower than the previous low. That means this low triggered this as a breaker block. Okay, so let me put a breaker block. All right. So when price gets above the previous high, that's market structure shift. What do we want? We want through the body, not just the wick. All right. So what is the idea on this and this? What's the key that we should be noticing in? So here, whenever market is structure shift is happening, but through the mitigation block, that means it didn't take the lower low, this low, and it tried to push higher. That means you cannot use this high as support as a high probability. All right, there is no high probability on this scenario just because this is mitigation block. That means it has not been taken this. So what I'm trying to say is, if you see this kind of market structure shift, you stay aware of taking action, because this is not a high probability. All right, until certain scenario happens here. I'm going to explain this in another video, but right now this is all you need. Look at your chart. If market shift is happening through the mitigation block, that means there is less chance price coming down and taking that as support to press price higher. Okay, it cannot repel price higher enough. Say if there is a buy side liquidity over here. Okay, if there's a buy side liquidity over here, that means price can go to, mm, there is chance. But what I'm saying is, in a high probability condition, that means that you can repeat, is either it would just go to the fair value gaps or imbalances that is on the way before the liquidity. That means you don't know where it can end up, because we usually take up to the liquidity. That's our classic targets. But sometimes what happens? Just the fair value gaps. So what does that mean? You are not getting the full chunk, and then you will see some price like this, and eventually, or like this, and then finally this. Say, okay? So to avoid this all, you want better market structure shift. So how to identify that? Right here, when that executes through the breaker, all right, by creating a breaker. Okay, what does that mean? If you see a price run to downside, creates a high, and then goes lower than the previous low, okay, and then you see body getting outside the high, okay, that means market structure shift is triggered. But how? As from the breaker block. That means you have a high chance of price returning back, and market shift will be more powerful and can easily execute all the way up to a buy side. All right, if there is a buy side liquidity, it is going to purge on that. Okay, so simple, right? But did you ever think this way? The answer is no. I know, yes, because a lot of students, even for ICT, 90% of students are not looking through this kind of perspective, because people watch 10 videos, 15 videos of Michael, and then they think, oh, they got the whole thing, you know? And then they see a little bit of improvements, and they think, okay, now I got it. And then they got busted. Some gets profitable if their risk management psychology thing is way better. All right, I don't say no, but this is what I have been watching. All right, so just a simple market structure shift, but how simple thing can trigger, right? What is that? Just these lows. See how previous low has not been taken, now that's a mitigation block, right? And ICT has been telling you mitigation block is not a good support for price to repel upside if it is in a bullish move, okay? But in a breaker, you can take that as support. The breaker block, the market shift will be more powerful and can take all the way to the buy side, correct? Now we're gonna talk about this big section, all right? And same goes to the bearish. So if you have any question on this, take a screenshot and then work on yourself, and then just annotate by yourself, maybe on a piece of paper, on a chart, just draw what I'm drawing, and then send it to the Discord free chat and ask. If you have questions, you guys can communicate there. It's all free, all right? But now here we're gonna talk about just this section, all right? Let me color it so that you guys can focus on it more. Okay, so this orange box, that means the price run to the downside. Price run to the downside will play a big role to decide about the market structure shift. Okay, it will help you to narrate how market structure shift is happening. How can that be more high probability, so that you can rethink and reutilize this on a repetition, so you can repeat. Because if you have just as a pattern, if you just use this thing as a pattern, it won't work. But if you know, because this is variable, so this can be changed sometime, this can be different sometime, this can be different sometime, the way of doing this can be different. So everything is a variable. Like, you have to study this, you have to study this, you have to study this. So when you study this properly, this one, this one, this one separately, okay, and what I'm saying is, when you study all the elements, and you know, okay, let's say this time it's a type of scenario, that means this is, let's say this is doing this, oops, okay, and then sometime you will see this, okay, sometime, so just ignore my drawing, all right, something like this, a certain accumulation and then distributes, then again retrace, and then, so different structures, right? So if you know what's on your this section, and if you can align this one with this one, this one with this one, then this is obvious, correct? It's just a math. Like, it just look like a math, when you have this, that, this, find x, correct? So same thing. So we just studying each thing slowly, and so that you guys can have a confidence, do your own research, do your own analysis. Backtest is always very important, because my confidence on something, on my model, is way more than anyone else, right? If my model is there, and I have seen that millions of times, that means I can execute without any emotions. I know where can I put stop loss, where can I put my hanging fruits, where can I take my full TP. So you need to build a confidence on your edge, all right? So we try to study everything, and then you find your own model later on, and you will work on that, and you will have enough experience, enough confidence, then you will see progress. Trust me, guys, that's gonna happen, all right? But for that, you have to give your time. So let's study this, all right? We're gonna study this. So what can happen? We have two scenarios, very common scenario, all right? It's nothing rocket science thing, but I'm just going to show you. So this is the orange box that I'm saying, talking about this one. So what is this? This is basically, I'm trying to show you, is this is low resistance liquidity run, all right? So okay, So this is low resistance liquidity run. That means price is going up, down in a low resistance zone. That means there is not much of resistance. Just in a simple, tight, slow progression of price run. Okay. So this is low resistance liquidity run. That means when price is doing this and when you see a market structure shift over here, without taking the low, okay, the low has not been taken, and you have seen a market structure shift, okay, it's just a simple term for market structure shift, so do not get confused, okay, it's just MSS, okay. So there's low resistance liquidity run, and what happened is the low, high, and then the higher low not taking this, okay, and price ran through this with the body above this high, okay. That means market structure shift has been triggered, but because of this is just a mitigation block, okay. But now if this would not be the condition, if instead of a low resistance, if there would be a high resistance, that means price is doing this, and then you see this, okay. Same thing without taking the low, and now you have a mitigation block here. You have seen a market structure shift right here, okay. But this is high resistance liquidity run. That means price is coming down with a high resistance, okay. This low resistance gave you a chance of thinking this, even with the mitigation block, can be a high probability. Why? Because of this. When price comes through the low resistance liquidity run, that means all the retailers are trapped right over here. What can happen? If they are changing the structure, that means they are going for attacking all the liquidity that is sitting on these liquidities, okay? All this liquidity. All right. So they want that quick move, okay? Because they all are coming, they all are bearish, making money, uh, without fear, just going lower. They're sitting chilling. They're chilling here, so they don't want the big players do not want them to give enough time to take their positions out, and they want that quickly. So even with the mitigation block over here, without taking the low, this can be high probability. Why? Just because of this, okay. Instead of this, if this is the case, instead of low resistance, what is happening? It's a high resistance, okay. What is that? It's just simple that it has a high resistance. That means it's going up all the way and then down back here, all the up a bigger range. When that happens, that means there is a high resistance. So now that mitigation block will have very low probability, correct? But when that's a breaker, even with the low high resistance, you have more probability of reaching all the way up, because just this is a breaker. That means it came all the way, it stopped all the stops here, and then running higher and taking support of this breaker is now validating this market structure shift. Like, okay, I can go now. If there is low resistance breaker, banger, Banger, banger. All right. Same goes and applies to all the bearishness. So you guys do your thing, take your screenshots, and then you guys can chat on the free chat. Let me know how was this. It's simple, easy process. Go through the charts, look at the charts, analyze, do your own research. Every time does not work, but when works, take notes. You know when it's working. What is the conditions? What time? When? You know, that's your duty, that's your effort. If you are in a pursuit of excellence, you have to do that. I tried my simple way of um, breaking down stuffs. So work on this, and I hope this first video will help you to get a little bit motivated. It has been maybe helpful to most of you. I wish I could have get this kind of knowledge way before, right? But God's timing, we believe in God. God's timing is perfect. All right. If you guys found this video, great. All right. Trust me, you will remember this video for rest of your trading career. All right. And hit the subscribe button if you want more. All right. And I don't know when I'm putting my second video, but I'll try, guys. I'll try. I'll see the comments. If it motivates me, I will come back, do my thing. All right. Have a good one. Good luck, Titans. Stay safe.